All of our analysts are very comfortable with technology. Technology is permeating every sector. I think analysts focused on healthcare and industrials and utilities are all going to be surprised at how profoundly technology is going to impact their sectors. We don't have to go out 5 or 10 years, it's here. We believe, we wrote a white paper in 2016 called Bitcoin Ringing the Bell for a New Asset Class. And so, yes, we believe it's here. We believe that Bitcoin is the reserve currency of the crypto asset ecosystem. We also believe that there will be very few huge winners in the crypto space. We think the cryptocurrencies are going to be the huge winners. So this is really flipping the internet on its head in terms of how it evolved. And the internet evolved without a payments infrastructure. And the reason for that is nobody thought commerce would evolve on it. This was for intelligence and academia, and consumers in the United States weren't even allowed to use the internet legally until 1991, Telecommunications Act. We believe that the Bitcoin is, and crypto world, the value accrual, where we will see most of the value accrue is to the cryptocurrencies themselves. This is not what happened in the internet. In the internet, the protocols, so Bitcoin's blockchain is one protocol, Ethereum another, the protocols basically just became standards, right? Technology standards upon which these very valuable applications were built, Facebook, Amazon, and so forth. The value accrued to the applications. This time, we think the value will accrue to the protocols themselves and the currencies as measured by their currencies. We believe that Bitcoin is already the reserve currency of the crypto asset ecosystem. And we can see that in that many crypto assets, most I would say, are priced in terms of Bitcoin. So that's the unit of account. The currencies are very important. We think there will be maybe 4 or 5 that are going to accrue the most value. Now, DeFi, watching it evolve, I mean, we're in the Wild West, decentralized finance. It's very exciting. So that's probably why Ether is going to be another one. We do have a fund right now only with 2 currencies in it. This is a private fund, and that's Bitcoin and Ether, but we're scouring the scene. Some of the custody arrangements associated with others like Decred aren't quite there yet. So, you know, again, we're picking our spots carefully. And so, yes, we think it's an asset class. We think Bitcoin itself I was quoted in some paper, I never said this, but someone did some homework and added what I was saying up and said, you know, ARK thinks this is a $10 trillion opportunity when it came to Bitcoin. And I said, I never said that, but I did actually say it with the building blocks. We think institutional could be, institutional going to say 5 or 6% of institutional portfolios, again, very low correlation. Well, we think that if you mean the market, institutions in particular, we think they are short innovation in a big way. We think individuals have a much higher weight in innovation and are more correctly positioned, actually. Yes. So innovation, is it an asset class? No. I think before crypto, this is the new asset class, crypto, the crypto asset world. And before that, equities in the 1600s. So those are asset classes. This is a categorization. And interestingly, we can look at what happened with emerging markets. MSCI, what's its claim to fame? One of its biggest is creating the category of investing called emerging markets, because when I was at Capital Group, and Capital was a global investment firm at the time, way ahead of its time, I remember we were investing in Brazil and Malaysia. We were doing country by country, right? And MSCI basically said, well, wait a minute, each of these countries has idiosyncratic risks. Why don't we construct this category to lower that risk and increase the return of investors' portfolios as they allocate to emerging markets, a new category. MSCI has just done that with innovation, and they did it with keywords from us. They approached us and asked, would we be willing to share the keywords we associate with innovations? So we considered that high praise. We were trying to attract the institutional world to innovation, but it was a no-go because there was no benchmark. Now, I just told you how much I hate benchmarks, but there was no benchmark. So against everyone's expectations, we agreed to do this with MSCI. And they have created some very thoughtful indices. They've taken our keywords and used artificial intelligence to scrape the world. And whatever they do, the convergences they use are different from ours. I've been surprised at how low the overlap is, actually. They have 400 to 500 stock portfolios. Ours are 40 to 50 stocks, so concentrated, rifle shot. They've got more of the scatter shot. And so I think they're doing a service to the world, and they're doing for innovation what they did for emerging markets, because the 5 major platforms, as Anthony mentioned, DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technology, they do not all behave the same way. I can tell you our autonomous robotics and autonomous technology and robotics fund, we just renamed it. It behaves very differently from our genomics revolution. But the interesting thing is they are both, they're not sector funds. They might sound like it, but they're not. In fact, even our genomics revolution fund cuts across healthcare, of course, that's the largest category, but one of the most important applications of genomics is in agriculture, crops, livestock, aquaculture. That's probably, in terms of percent impact, going to be where the biggest impact is in the ag space. So what we've done at ARK is, this is to anticipate one of your questions, is we have turned our research department upside down relative to traditional asset management. Our analysts are specialists in technologies that are going to cut across sectors. Mm-hmm. They are not specialists in sectors or subsectors, and they're not comfortable with technology. So we set it up where each of our analysts is very comfortable with technology.